The periodic table of investment returns ranks the returns of all these different indexes against each other.
Indices.
What's that?
The plural of index is indices.
Indices? The plural of index is indices?
Indices.
I mean, that sounds way too fancy. Each year, the Callan Institute updates their periodic table of investment returns. This type of chart is called a quilt chart, and this one happens to show the returns of all these different indices from the previous year. And each year, I look forward to checking out the updated chart to visualize how different asset classes, capitalization, and equity markets performed in relation to each other in the previous year. Yeah, in middle age, this is my idea of a good time. Now, the Callan Institute is not the only firm that makes a quilt chart like this. In fact, I've got another interesting chart to show you later in this video. What is the Callan Institute though? It's an investment consulting firm. Apparently, it's among the largest independently owned investment consulting firms in the US. That's great and all, but we're here for this fantastic chart that they update each year and make available on their website. I'll link to the chart in the video description. And I wanted to bring this chart to your attention because the periodic table of investment returns was just updated with 2023 data. That's right, the results are in. And it turns out that large cap equity performed the best in 2023 with a 26.29% return. Okay, no surprise there. We can think of this as the S&P 500, and we all know how the Magnificent Seven led that index to such great heights last year. Let's just quickly go through all these different categories that we see on the chart. Large cap equity, again, that's basically the S&P 500, and that had a 26.29% return in 2023. Developed international, so that's going to be equity that's outside of the United States, that is in developed countries, that returned 17.94% in 2023. Small cap equity, like the Russell 2000, returned 16.93% last year. High yield, which is basically like corporate bonds, did also very well last year, 13.44%. Emerging market equity, coming in strong with 9.83% last year. Real estate, and this is global real estate apparently for this index, but this is returned 9.67% last year. And international fixed income, then at 5.72%. US fixed income right behind it at 5.53%. Cash equivalent was in last place, but still not too shabby at just over 5%. No wonder 2023 was a great year for investors. There was basically nowhere to invest that did poorly. You could pretty much put your money anywhere. Throw a freaking dart. Of course, the Magnificent Seven stocks pulled large cap equity to the top of the list, so you hope you had a healthy portion of assets invested there. But even international stocks held their own in 2023 with a strong 18% return. This is pretty interesting to see how these different investments stacked up, but this is just for 2023. What would be even more interesting is to look back at the past 20 years of data, and lucky for us, this periodic table of investment returns does in fact go back 20 years. Now, when we look at each index, the color coding makes it easy to see how each one has ranked over the past 20 years. Large cap, small cap, developed international, emerging market, US fixed income, high yield, international fixed income, real estate, and cash equivalent. Very interesting. I'm not sure what Callan uses this chart for, but hopefully they show it to their clients and use it to stress the point of diversification into different asset classes such as US stocks, international stocks, and bonds. Because when I look at this chart, my big takeaway is that the pattern is random. Every year is different. It's impossible to predict what will happen ahead of time and what the outcome will be. So the best course of action for a buy and hold portfolio is to own a mix of these diversified investments. For my own portfolio, I prefer 20% in US bonds with the remainder split 80% in the total US stock market and 20% in international stocks. I call it the Pareto portfolio. We can see in the chart that some years real estate does really well and small cap value too. But I think I've got these covered within my total stock market fund. But the chart does remind me that I'm light on a couple of these in my portfolio. I don't have much or any exposure to emerging markets or international bonds. VXUS is my preferred international equity fund, and it's mostly comprised of developed markets. I mean, look at this. There are some years that emerging markets absolutely clobber everything else. As recently as 2017, it returned 37.28%. That's just obscene. But then there are some terrible years too. I think for now, I'm sticking with my simple 80-20 Pareto portfolio. It's been serving me well, and it's also my year of simplicity. So yeah, I'm leaning toward keeping it simple. There's plenty to compare here on this chart, but are there assets that would be cool to see on this chart that aren't here? Crypto? Gold? Now, I'm not interested in investing in those personally, but it would be interesting to see where they land. Of course, we don't have 20 years of crypto returns. I'm not even sure we could do 5 years yet. But actually, I did some digging, and it turns out there is a chart like this that shows Bitcoin and gold performance. It's this quilt chart from Bitwise. I mean, of course, a company like Bitwise Asset Management, which is a crypto index fund manager, would want to show the amazing gains of Bitcoin. And Bitcoin is looking pretty good here, with a minimal correlation to US stocks and huge gains in many years, despite a couple big down years. But while Bitcoin may have existed since 2011, very few people have actually been investing in Bitcoin for that long. But anyway, this chart does show Bitcoin and gold, so we can take a gander at those asset classes here. I doubt that Callan will be adding these assets to its periodic table of investment returns anytime soon. Anyway, I just find these charts interesting to look at, and the periodic table of investment returns definitely emphasizes the importance of diversification. What about you? What do you think about these charts? Any big insights or takeaways? Does it make you want to change your portfolio at all? Let me know what you think in the comments. If you enjoyed this video, hit the like button and check out this next video that I think you'll like as well. It explains how I invest my entire portfolio. The majority of my portfolio is buy and hold. I use index funds and low-cost funds such as VTI, VXUS, and BND,